senior management people are here. I will try to do justice to see that all participants should be able to get their query resolved. As we go during the course of my talk, your various queries might be got addressed, but if any queries are left out, as Mr. Kalyan has told, kindly put in the chat box, and I will be happy to answer those questions. Uh, to begin with, if you have a lot of expectation from me, so I think I may not say that I am a very learned professional. I have been largely in the public sector bank. My exposure in the housing finance industry is only for last 10 years. But still, whatever I have learned among all of you, I will like to just share with you. Go to the first slide. Friends, before we move to the risk management practices in the affordable housing finance, it is imperative for all of us to know what is affordable housing finance and how is the market, how this market is beneficial, how this market is important for various housing finance companies and NBFC and bank to actually involve in this market. Affordable housing word is a very misnomer because the definition has never been clarified anywhere at any point of time. Government has picked up the definition in certain aspect in different way, but Reserve Bank of India, in terms of priority sector guidelines, they have clarified. So let us work on that definition. What RBI has clarified that in the non-metro, if the loan amount is 25 lakh rupees and the property value is 30 lakh rupees, it is affordable housing. In metros, if it is a loan amount is 35 lakh rupees and the property value is 45 lakh rupees, it is an affordable housing. These are broadly two definitions, and NHB takes some other definition. Government of India for PMY has taken some other definition, but largely it is confined to the EWS and LIG segment. Just see from this slide how the housing finance, it contains the entire housing, has spanned from 2013 to 2022. From 7 trillion, the market has moved to 31 trillion. Initial pace was slow, but subsequently there has been an outburst in the housing finance, whether premium housing finance or affordable housing finance both. And it is expected that by 2025, this industry will reach 54 trillion value. 54 trillion value this industry will reach, and that is more important. Next, Tilna. Next. Now you see, when you think of why affordable housing finance in India, the story of affordable housing finance is not for 1, 2, 3, 4, 5 years. It is going to be decades story because the penetration in the housing in India is only 11%. The most near parallel country is China, where it is 28%. So you can understand that how much the scope in India exists to provide housing finance. Therefore, it is a bright future of all of us who are listening to this talk. Next. Now, you will be interested to know how is the market size is. September 2019, the Reserve Bank of India published a draft report on securitization. In that, they mentioned that there is 100 million requirement of houses in India, where 45 million for EWS and 50 million for LIG, and only 5 million for MIG and above. If you translate in terms of the home loan requirement, for EWS is 5 trillion requirement, for LIG it is 30 trillion, for others it is 22 trillion. So now you can see that the total requirement for the housing is 57 trillion, and it is not going to be static as the nuclearization for family is taking place, as those who are in 15 years of the age, they are going to be in 25 years of the age. As urbanization is taking place, this requirement will have to go up massively. Next. This is very interesting slide because when I am talking about the affordable housing finance, you must know the up to 15 lakh rupees loan ticket size, by value it is 14.5. It used to be 3 years back 20%, but due to rise in cost of construction, the 15 lakh has slightly moved to upper segment, and by volume wise, by number wise, is 56%. Here, all affordable housing finance company, a small finance bank are predominantly operating. 20-25% share is taken by the other big HFCs and the banks. 15 to 25 lakh, again 14.5, but 17% by volume it is there. Here, the bank, main HFCs, affordable housing finance companies, SFB, all are participating. The rest goes to the 25 to 35 lakhs and 35 lakhs and above, where it is predominantly the market of banks and large HFCs. So now, friends, you can understand how massive is the market available. If I share with one more data as of September 2022, which is not available in presentation, total loans as of September are 1,02,000 crore up to 5 lakhs and 2,49,000 crore from 5 to 10 lakhs. It means up to 10 lakhs rupees housing loan and LAP taken together is 3,51,000 crore. This is a massive market, and we all were worried about the risk in that segment. How you can wish away the market, which is going to be highly rewarding because of the risk perception. So I will talk subsequently how we can manage the risk. Next slide. I will quickly take you between the normal housing finance and the affordable housing finance, where we talk below 15 lakhs or even below 25 lakhs. Normally, predominantly farmer salaried segment, and we have covered roughly 25% of the market of housing from the banks and the top HFCs and some of the affordable housing. But the market for the low income focused housing finance company is predominantly in farmer segment and lower farmer salary like drivers, small employee and MSME, small corporate employees, small government employees and all that. In first case, it is documents by underwriting. No great job is required to be done. Just put the data and you can underwrite what is the loan requirement. But in this case, the underwriting requires a great skill where it is PD based or personal discussion based underwriting. Only in case of farmer salary where you get in the bank account, life becomes a little easy. But PD based underwriting requires a great skill. Ticket size in the earlier case is predominantly 25 lakhs and above. And in the affordable housing, it is predominantly 15 lakhs and below or even 25 lakhs and below. This is market for middle and high income. This is market for EWS LIG. Properties are mostly in municipal limit in case of normal housing. Properties in case of affordable housing are at the outskirts of bigger cities and tier 3, tier 4, tier 5 cities within the city and outside. All the small roadside towns you see, this is the market for low income affordable housing, where a small market is there and people are making their house, and that is the market fully dominated. Here people buy flat purchase or they construct a house with the building plan approved and everything approved. But in case of our case, this is the properties are constructed by the informal builders, 10-20 flats they will make and sell it. Risk is involved huge. They may not construct the property fully, therefore risk is involved, or they will buy a piece of land and construct a house, maybe with plaster, maybe without plaster. Individual self-construction and development authority plot is normal. In this case, it is a farmer sold land or a small property dealer. They do the plotting and they sell the land, and the houses are constructed by the poor people. In earlier case, there is high saleability because there are large number of buyers when you go under surface action. But in our segment, if you are lending in a small town or outskirts of city, the buyer will be from that segment where you have lent. There is a limited number of buyers will be available to liquidate the property in case of surface. Interest yield in the farmer segment is 7.5 to 9% because you are taking less risk, you are getting lower rate, and the cost of fund for the banks and big HFCs is also lower. But in our case, in the low income, the income yield ranges from 13% to 20% depending on which market you are catering. Some companies are able to charge even 17-18%, but average is 13 to 14%. But cost of borrowing is also 1 to 3% higher depending on the nature of company and the net worth. Earlier case, they do normal LAP of 25 lakh, 50 lakh, 1 crore, 2 crore, 3 crore, but low income affordable housing finance companies do the micro LAP. Here in number one case, 97 to 98% collection happens through electronic mode. In our segment, the collection efficiency happens only 80 to 84. It means the remaining has to be collected through our collection machinery. Next slide. What are the benefits available? Why government is giving benefits? You have seen in the earlier slide where the huge requirement for EWS-LIG. The job of government is not to support those who are rich. Job of government is to provide a dwelling unit for those who are poor and they need graceful living. The government of India, NHB, RBI, banks, they are extending a lot of shops. Refinance from NHB at a lower rate is available. Banks, because they get the priority sector loan of your lending, they are liberally giving loan to the companies. Some of you may say banks are not giving, but it's not the case. It depends on company to company. Banks are always willing to buy out your loan pool at a lower rate of interest because that is a priority sector for them. Co-lending opportunities are available for priority sector in the bigger bank because banks are mandated to achieve priority sector target of 40%, of which excluding agriculture 18%. Housing also contributes a lot for them. Reserve Bank of India has fixed up the low risk weight for capital requirement. 35% is risk weight if the LTV is below 80%. For housing, affordable housing, 1% GST and 5% GST is prescribed depending on the nature of the property. You can see the 1% GST up to 45 lakh rupees property for under construction, that is there. That is another facility given by Government of India. We are lending. You please understand, ESG is a known concept. Environment, social, as well as governance. Environment, if you are doing green housing, many companies have started. NHB gives 1% lower rate of finance. And on green housing, a lot of DFIs are willing to provide you loans at the lower rate. And you are serving the cause of society because you are actually doing the financial inclusion, which is the agenda, not globally, but for the Indian government, the prime agenda. So therefore, and lot of, in 90% cases, women are co-borrowers. So you are fulfilling all the criteria for getting loan from DFIs. It takes time, but you get a lot of benefits were there in PMOI scheme. Now CLSS is withdrawn, but still in the rural area, the schemes are there, other schemes, and the three verticals of PMOI are continuing with huge outlay in this budget. Government and NHB provides the guarantee under the Credit Guarantee Fund for Low-Income Housing. None of us we avail this facility, but this is an excellent facility up to 8 lakh rupees loan. Even if you are doing some property which are defective or some customer who are weak, you can get a guarantee from the NHB. But unfortunately, this has not been popularized. Next. I am coming to the now risk part. Friends, the risk is in, I have just told you that how massive opportunity is available. Provided you are able to manage the risk, you are going to be a winner, not for today, but for decades to come. Risk is inherent to any business. Remember in our childhood when you were learning the bicycle and you were taking the turn, automatically you were leaning towards the curve so that you should not fall down. So risk management is inherent to the human being, and for business it is very important. A ship in harbor is safe, but that is not what ships are built for. They have to sail. So if you have decided to do the housing loan, you have to see that you can't be risk averse. You can't avoid the risk. You have to mitigate it. My dear friend, this is the key challenge which most of you have learned over a period of time. Just quickly go back 2010 to 2012-13, when roughly about 15-16 companies started their business in low-income housing. The companies were not knowing, there are no guidelines, there were no understanding, there was no knowledge how to underwrite the informal segment, which in India is massive. 65% urban population and 90% rural population is engaged in informal segment where documents are not there and they are credit worthy. So how to, at that point of time, many companies in the quest of increasing their loan book burned their finger. Few companies could go very cautiously. But after 15, all the companies which have started, they have a great learning, and probably to my understanding, no company has NPA more than 2% despite two COVIDs and RBI guidelines for NPA harmonization. So that is the learning all of you have got. When you want to run fast, please see that your legs are always your feet are always on the clutch and brake. You should not simply run fast just for sake of going a number. Next slide. Which are major risks? I will tell you, these are in our segment, all the risks, whether it is bank or whether us, broadly they are defined the credit risk, market risk, and operational risk. All the risks which are not defined coming in credit and market, they are part of operational risk. But why I use the reputation and regulatory risk separately? Because in last 3 years after the ILFS and DHFL and Reliance Home event, the regulator has been tightening the nose and they are bringing a lot of regulation. Therefore, you cannot be on the wrong side of regulation. I will talk in the later slide about the regulatory risk. And reputation risk is very important to be key. The moment your reputation is damaged, you will lose everything. You will not get loan, and that will cause the contagion effect of the liquidity risk. So credit risk is, you all know, because it is a default risk. Our counterparty, if a seller has committed a fraud, the counterparty risk comes to you. Concentration risk, I think most of us try to avoid. I'm just an example. If there are 50 employees in a company, MSME, or 50 employees in a big shop, you go and market and you want to give loan to everybody. That is called concentration. If any small town, you go and start lending 50 cases and all you are going to give the milk seller or to the one activity, probably you are doing the concentration. Because something happens to that industry or activity, you are gone. So therefore, when you decide your policy, always see that you should not assume more than 25% risk in financing the employees of a MSME. If it is a big corporate, you can go 30, 40, 50%. That you see. That's the reason every company have defined the risk appetite. They have to mention how much we will do in one builder, how many number of flats will do. Like an informal builder has considered 40 flats. If you are lending all 40 flats, you are carrying the risk. You decide I will do 25% so that your risk is limited. That is called risk appetite in any segment, whether informal segment, formal sale lead, plot loan, self-construction, row houses. We have defined what percentage of loan you want to give, what percentage of loan you want to go to lab. That is called a risk appetite, which I think all the seniors should define and monitor through technology. Otherwise, you cannot control. Somebody in the branch will do more flats in one building, you will have problem. Somebody will give in one village 20 milkmen, and some problem comes, all loan will come bad. Please understand, concentration risk is the one risk which you have to avoid. Default risk is obvious. When you are doing loan, some default will happen, but certain measures, I will talk to you later, so certain measures will help you in controlling that risk. Market risk is another one. For the banking sector, they have security, they have market fluctuation. But for all of us, except bigger companies, you do not have huge investment in security, so you are not carrying that risk. But interest rate and liquidity risk is the one risk which we are carrying. If you are borrowing from overseas market, you are not hedging the currency, you do not know where dollar will go and you will have a risk. So liquidity risk is the one risk which fails every business. In the globally, liquidity risk is the highest risk which fails the business. If you are not managing your asset liability management properly and you have a default, your interest rate will go up, you will not get money, you will go into the vicious circle of getting the money or at a higher cost. Interest rate, of course, in last about one year, you have seen RBI has increased 2.5%. That is a risk we all know to manage and we are all able to manage. Operational risk, friend, among all credit and market risk, the operational risk is more pronounced. All of us take it very lightly, but this is the biggest risk we are carrying because it is human failure, technology failure, process failure, compliance failure. Cyber people, they are sending the message to your customer, pay EMI, and one fine morning your poor customer pays the EMI to them and you are nowhere. The customer attrition, other companies are taking over. So operational risk is the vast risk which I think it is high time for companies to manage. That is my personal appeal to all of you. Credit risk, you have learned over the period of time. Market risk is head office is managing, and a branch, if you are not bothered, if your guy is not knowing how to underwrite a loan, if a guy is not knowing how to value a property, you are going to end up in the problem. If a guy is gullible and he takes money from a customer, or he is having colluded with anybody else, you are having a problem. So this is the biggest risk of the human people leaving the company. That is a risk because you lose the talent, experienced person, and moreover, if he does something wrong, it is a problem. So my dear friend, this is my message to each one of you, that operational risk should not be taken at a back seat. Next. Friends, risk is a simple thing. Life may remember three things: awareness, awakening, and action. That is in Desi style I'm telling you, awareness, awakening, and action. In the technical term, risk identification. Wherever you carry risk, whether in property valuation, customer PD, customer income assessment, customer identification, whatever it may be. So identification of risk, when you make a process in head office and convey to the field, you must know, and I think risk should be a culture. Every employee, with the sales manager or DST, should know what risk he is going to undertake. And that is the top management duty, to communicate widely the risk awareness. The risk identification is one. Having identified the risk, you have to measure an assessment. Like if you are doing a 5 lakh rupees loan and you are processing that loan like a 50 lakh rupees loan, your measurement is wrong. You are unnecessarily wasting your talent and energy on a 5 lakh rupees loan where the risk is limited. I don't say that processing should be agnostic to the sourcing of the loans. Processing should be proper, but you cannot apply one size fit for all. Please understand, you have to see what sort of loan you are doing, what sort of risk you are assuming, and how much time you have to give on that. So therefore, risk measurement assessment is to be done. Then you have to see what are mitigation are there. I'll give an example of mitigation. You give a loan, you have an internal property valuation or external. But if the loan amount crosses some more about 15-20 lakh rupees, you don't rely on the valuer. You send your own branch manager to go and look at the property. Why? Because you want to doubly sure that the third party is not cheating you. The risk mitigation is the part at every point of time, and it should vary from it should be risk-based. Super risk-based means what is the risk you are carrying, 5 lakh, 10 lakh, 20 lakh, 50 lakh. According to that, you have to make. Policy has to be uniform. Like KYC document you are not taking, you are carrying the risk. Like Aadhaar OTP, you are not verifying, the customer identity fraud may happen. So lot many measures we all have developed over a period of time for the purpose of risk mitigation. And having risk mitigated, in head office, you must monitor it. I told awareness, awakening, action, and then monitoring. Whatever the IIR wise, LTV wise, profile wise, the customer wise, the product wise, you have to do slicing and dicing and see location wise where the bouncing is more, where the problem is there. So every month or every quarter, the risk department should carry out where we are carrying more risk and which product is more risky in one location. One product may be not working well in Kerala, but why we working in Tamil Nadu? Well, so you cannot apply one side. You have to tighten the policy depending on the your monitoring tool. And when comes risk governance, it is the responsibility of the board to ensure that risk management practices are very well in place and risk management as culture company is following, and that is the responsibility of board, because if board is not going to do it and MD and CEO is not going to do it, you are going to be in a problem in future. Next slide. Now I will take quickly. First of all, what are the risks you are carrying? Your customers are living either in outskirts of city. They might be working in the center of Mumbai, but they are staying somewhere in Virat, Itwala, or the out of the city. Tier 2, Tier 3, Tier 4 towns, they are making their house. 40 kilometers small town is there. They commute and they make a house because they are not able to buy the property in their means in the big cities. Your customer, that clear thing, you have to take call on customer, you will have to take call on property, and that is the uniqueness of affordable housing. There are many customers who are new to credit. That number is now coming down. It used to be 35% 3 years back. Today it is around 20-23%. The new to credit customers are there, while bureau record is not there. They earn maximum income either from MSC, like a Bada Pawala is there. He is employing 4 people. So 4 people are getting earning from a informal business. And the business is closed, their earning is being closed. Earning is getting stopped. So they are vulnerable depending on the informal business. If the key man dies, like the vegetable vendor, the key man dies, the shop is closed. So there are multiple cash salary. They get most of them. They get the cash salary, whether they are working in a diamond factory or anywhere. Many companies are still giving cash salary. So their activity from where they are getting cash salary, that is more important. That's why I told you, you have to avoid concentration risk. You should not fall prey of doing huge business from one source. You should diversify your business. They do not have documents to prove their cash flow. Like if a small business is there, a small shop is there, pan wala is small hotel, they don't give any bill voucher. You are in the wilderness, you don't get, unlike a formal segment. But they earn, they manage their family expenses, and they have a need for houses. Even the guy who sells the book at the crossing, road crossing, and the signal, he also earns. So please understand, there is opportunity in every activity, and we must know about it. It is a primary self-employed and no low-income farmer salaried segment, PNR, some small employees. Regarding property which you mortgage, that is your ultimate security in case of default. The title document, land title document, they buy from a farmer, they buy from a small town. The document to title are never great, but documents are not defective. Please don't confuse that you are going to take a defective property. Documents are there. The property sellability is not great. And if you are able to, like if you are giving a plot loan, identification sometime because of problem, unless the entire colony is developed, that risk you are carrying. Second is the marketability. I just talked about that. Deviations in the property. They have 500 square feet plot. Government or municipal body wants you leave something in the front, something in the back. They construct the entire plot. So sometimes they do deviation. And then legal and technical valuation of the property is also challenged. But this is no way challenged if you are having the valuer, external or internal valuer who are well trained. This doesn't come a challenge, provided the valuation is done properly. Next slide. Now coming to the risk in customer onboarding. The biggest mistake we all are doing, if a person is getting bank salary in the bank account, it's a formal salaried account. We are very happy we never do visit of customer. I do not know, 90% companies, they do the tele-PD and they are very happy on that. Friends, maximum fraud in last 4-5 years have occurred in the former salaried cases because the customers are not visited. I am as a banker, I am for the view, even if you give 5 lakh rupees loan, please see that somebody visits the customer. That is called due diligence of customer. They are from remote geographical area. They are from informal segment. Whatever the sourcing happens from the scattered. Non-prudent is not proper word. Sourcing happens from the anywhere. Somewhere connected. Somewhere somebody brings. Now top DSA have also come in this. The sourcing now happens from anywhere. Your underwriting, your selection should be agnostic to the sourcing channel. Don't bother who brings the file. Even a dog brings the file, take it, but do your own diligence and then you give the loan. Don't leave the case, but do your due diligence properly. Manual or traditional way of sourcing also takes place. The sourcing, if the sourcing is proper, my dear friend, 50% the credit risk you are getting properly managed. This is the first level of entry which we commit a mistake. My suggestion to all of you, please take care. Now coming to identity and underwriting. Now, of course, because there are a lot of things, online verification are available, whether Aadhaar card through OTP, whether voter card online verification, IT return if they are having, whatever EPFO say you can do that. There are many verifications are possible. Lekin there is no substitute for the physical visit of the customer. Because then your sales manager or your person knows how the customer is. A question will come, how we underwrite where the informal segment, no documents are there. All of you have done mastery in that. Simple way, go to the shop, sit there for half an hour, find out how the customers are coming, what is the cash, and then visit his home. Ask your credit manager to visit his home to find out the pattern of his family expenses so that he can corroborate whatever cash flow he assesses. He will corroborate about his family expenses, then he will not falter. Friends, if you check up your portfolio, formal self-employed, the non-performing loans are more. Informal self-employed or even cash salary, the non-performing loan are lesser, because in formal self-employed, you blindly do based on documents. Here, you visit and assess their cash flow. That is more foolproof and pakka. You may falter in set of cases. Somebody is doing fraud and he has set up the cases. But that mistake will happen if your credit manager is not thoughtful. If he is not capable, then only he will go and you see any shop which customer is taking place. But there, as a management, we have to guide him that he should go and visit the shop independently, not with the customer. When they go with the customer, they are vulnerable to the various risks because the fraudulent customer will take where he wants. Property assessment, identification does come a issue, but that can also be solved with the Patwari or the Talati papers if you take. Property locations nowadays, that GPS tracking are so many tools are available, but that problem is not there. Low marketability will always be a problem, but other problems are largely not existing. Title of property, different states have different laws, so uniformity is not there. Therefore, you have to have a legal policy as per state-wise. Inadequate revenue record. Now, most of the states are digitalized. That problem is also getting over in next 1 or 2 years. So I think the property due diligence is more important. So that some of the informal builders, they have sold same property to a couple of people. But again, proper visit obviate all these problems. My people should be guided to go and visit and inquire from nearby people. Kalyan, next slide. Now, loan servicing, loan management. This is coming to the operational area. There I told you it is the biggest risk area. When customer comes, even if your sales manager has brought KYC paper, you get customer signature on that. Properly NAC registration to be done. Do not create too much of OTC. Otherwise, check will not be handed over for 3-4 months. Not handing over check for 2-3 months and charging interest rate is going to be taken very seriously by the regulator. Please note that educate your sales manager and the branch manager to avoid too much of OTC so that check can be handed over in 25 days or 30 days. Because that is an original document, legal document, chain of document, all those things are to be checked. If the operational manager is not competent, let your regional legal manager should do it. Management of PDC, check clearance, NACH, All those things are very important. This operational area requires, and documents are going to be the warehouse. They should be properly checked, whether after concurrent audit or whatever it may be. You see that title documents should not be taken. Now, insurance is very important. Somebody may think, why I should take insurance? Friends, your customers are from the low income segment. The vulnerability of their life is always there. If key man dies, poor man's family, which is bereaved family, they have only one roof for themselves. Don't be ruthless for them. If you take insurance, at least insurance company pay you the outstanding amount. Customer may resist, but low income customer of 15-20 lakhs, they don't resist. If you go 50 lakh rupees loan, they say, I will not take insurance. But there we are not much worried. Try to see that your 95-99% customers are insured for the life, so that loan is secured and they don't have problem. Whether you do health insurance or not, but property insurance is mandatory to avoid any problem of earthquake and all that. In collection, this business is highly operationally and collection focused business. The collection department is as important as the sales. There are two wheels of a car. Sales and collection, they go together. Most of the companies have the problem, they did not develop the collection process in the beginning. This must be handled, because if you are going from banking efficiency 82-83%, 17% have to be collected. There is a vulnerability of getting cash. So a lot of payment gateways are available. You have to educate customer. He can send through Google Pay or Paytm, but still 3-4% cash collection happens, which is fraud with the risk. How the cash is accounted for, how the cash is not. I'll give an example. If cash comes 1 lakh rupees in a day, in the last few days of the month, and your operational manager is responsible for that, branch manager doesn't bother where the cash is kept. You have a lot of faith on him. Today he needs 10,000 rupees, he will take and he will spend. His habit, he becomes habitual. When he needs money, he will take money and he will use it, and he will fill up the money also. He will not do fraud. But you are spoiling a good employee to become a fraudulent employee. That is what I am telling. In lending, you need to have trust. But trust has to be verifiable. Whether it is my closest friend is there, if my duty is to ensure as a branch manager, whether the collection cash which is there as per book is there in the coffer or not, I must check it. Otherwise, I am spoiling a good employee to become fraudulent tomorrow and the bad name to the company. These are small steps. When we do too much of trust, that creates more problem, and the good employees are sacked because they become fraudulent by their habit. So see that it doesn't happen. Try to bring banking habit in the customer by calling and whatever it may be. Collection cannot take the back seat. The moment bouncing you get, immediately you should swing into the action to get collection done. If your collection is all right, if you are able to get it 98-99% efficiency of bounce check, you are winner. You are going, whether you go to 2 lakh rupees loan or 5 lakh rupees loan, you are not going to have problem. Now coming to customer service, this is another gray area. Field people don't bother. And what happens if you create problem for customer, you don't be transparent. Tomorrow regulatory nose is getting tightened. And any complaint from customer, now integrated ombudsman is going to be created. All those will spoil your company's name. And if a customer service is given, well, this is a big risk. The customer will refer you more cases. He will be your spokesperson. So please see that customer is treated as important as the employee. Customer first, employee first. Do not compromise into that customer's complaint if comes. Don't ignore a small complaint. A customer makes a complaint that somebody has taken 10,000 or somebody has not given my check. You forget and you ignore that. You do not know one is small complaint which gives as a management opportunity to you to set right things you ignored, and that problem may become a big problem in the future. So please be a good listener. Don't ignore a small vices of customer. Next, sir. Next, Helen. Now coming to the regulatory and people risk, I will spend some time on that. When account becomes surfacey, fraud also takes place. Frauds have to be covered 100%. Fraud does not mean that you will not. You have to see the root cause analysis why fraud has happened. And I tell you, either the verification is not done proper or the identity fraud is difficult to check. But in today's environment, 10 years back, the situation was different. In today's environment, the number of frauds, even in the low income segment, has come down if the proper checks and measures are done. Surfacey action has to be started immediately when account goes in bucket 5 and 6. But prior to that, efforts should be to encourage pre-delinquency, pre-NPA monitoring, so that account should not go beyond 60 or 90. The moment account go to 60 days, it's a threat, and you have to be alive with that. Now, with Reserve Bank of India has already harmonized the NPA classification like a bank, where once NPA is always NPA, you have no choice, my dear. So you need to understand that this area of the moment account moves to 31 or 60 days, you should get alerted. Once it becomes NPA, try to get OTS. Surfacing takes a lot of time and a lot of money is wasted, and you are not able to sell the property to cover the entire loan in many cases. So it is better to cut the loss and go for OTS. But OTS also, in field, there is a lot of vulnerability is there. Where money is there, problems are there. And this is difficult task, but with proper education that can be controlled. The people should sell the property or bring OTS to the maximum value. As a top management, you need to be aware of that. There is another problem in collection, that pocket funding. It's a big risk, it's a cancer. I'm sorry, my dear friend, many companies are still continuing. It's a cancer. If your regional collection manager or head collection is compelling the branch staff to see that account doesn't go to in 31 day bucket or 60 bucket or NPA, and ask them to do pocket funding, from where that poor guy will bring money? This will keep on going into circles, and one day there will be a fraud. Never encourage any employee. That is what I am repeating. The employees are more vulnerable. We spoil good employees to do the bad one. As a management, we may declare NPA more, but we should always avoid pocket funding. That is a cancer. It should be discouraged. We should ensure that cash collection should be in such. Today, we are having the handheld devices, and the customer gets real-time receipt and SMS. If you are not having, you introduce that, because cash is the most riskier area and most vulnerable. It has to be properly avoided, that employees should not get tempted to commit. And my dear friends, never worry. Even some mistakes are there. If the property is not fraud, property is fraud, you can't do surfacey. If property is not fraud, even some document lacuna is there, you can do surfacey, you can get the money. Don't worry. The law very clearly says that once you, first in time, first in life, you are first mortgagee and somebody has given another loan, he is second mortgagee, your right will not be questioned. If the property is funded by many, that person who has the first mortgage, he has the right. If some defects are there, whether stamp duty is not paid, notice of intimation, is a risk. Any small risk is a big risk. Today, small risk become a big risk. But my point is very limited, that even if some deficiency is there, that can be rectified and you can recover the money. Many of us are having apprehension. This defect in the property, this is defect. We can't recover. No, please don't bother about that. If you have property document, no papers are there, and loan is given to him, no fraud is there on property, you can still recover. You will not have a problem. But there are methods that property is rented. You need to take NOC from the tenant. Otherwise, Supreme Court law will become in picture. Tenant can question your right. But even then, you can sell the property along with tenancy. It is not that your recovery is marked. So that apprehension don't have. Be professionally competent, be professionally efficient, and you should know what you are doing. Now, coming to the legal action by customer, many customers, they are given more guidance than what you have. and they go to DRT against your action. But doesn't matter. It takes time. It's a delayed tactics, but you recover the money. Here I will touch one more point. Most of you have apprehension that these are subprime customer, account will come NPA. All of you have witnessed 2 years of COVID. And October 21, RBI brought harmonization of NPA norms. Despite all these problems which you have faced, restructuring, no SARFAESI for 2 years, all those hands were tightened. Still, no company has NPA more than 2%. And RBI guidelines are now behind. We have behaviorally conveyed to the customer, and I think most of the company below 90 days are having hardly 0.1, 0.2% NPA. It means any guidelines which comes, it hurts us, but subsequently it is getting adopted. So always remember, every day if RBI is doing a circular, it does not mean that they are hurting you. They are bringing more strength, more transparency in the housing finance or lending sector. Because any problem in any NBFC, HFC, it has a contagion effect in the banking system, and entire country's economy gets shattered. That's why regulator is tightening the nose every time. And you must have seen in last 2 years, norms on securitization, how the master circular on housing finance, principal criteria, 60% you have individual, 60% you have the housing loan asset, and then you have 50% individual loan, then only your housing finance company. So you cannot do too much of lab. You want to be housing finance company, you want to take benefit from the government and the National Housing Bank, you have to do home loan predominantly only. That's why the criteria is brought. Then they brought the they brought that you have to have a fair practice code. You have to be transparent with the customers. Your entire website should be properly. Everything is mentioned. What penal interest you have to charge should be sanction advice. What EMI you have to charge should be sanction advice. Everything has to be conveyed to customer, because regulator is more focused on the financial system strength and the customer's interest. Finance system is, a regulator is not interested what you earn or what you don't earn. A regulator is only interested in the financial system. The country's economy should grow, the credit should grow. All those things are important for the nation. That's why the regulator is tightening nose. Now, scale-based regulation has brought, where all HFCs are kept in the middle layer. Base layer up to 1,000 crore. No HFC is there, only NBFC are there. 1,000 crore and above, all are in middle layer. At middle layer, the regulation is a little more stringent. Base layer, it is light touch regulation. And upper layer, our Reserve Bank of India will pick up top 50 companies, which are somewhere around 30,000, 50,000 crore, and put them in upper layer, where the regulation is more like a banking system regulation. And then top layer, which is vacant, where Reserve Bank of India will transfer some of the companies, like which are 1 lakh crore, 2 lakh crore, and ask them to go for listing and maintain all the things. Exposure norms are kept. You cannot give loan to one individual more than 15% of the asset net worth, because everything, every appetite, risk appetite is linked with your net worth, so that in case of problem, you are able to survive. The regulator has brought multiple regulation during last securitization regulation. Regulator has brought like sale of pool and through securitization. So I think the regulator in last about few years, digital lending they have brought regulation, collection they have brought regulation, NPA recognition they have brought regulation. So regulator is every time they are bringing some regulation to ensure that the health of financial system remain important. At the same time they are supporting, they brought co-lending regulation. If you are not having the liquidity, you can source loan and share with the banking system, and you can run your company. So friends, let us not worry about what regulation is there. Every regulation is here to ensure that you are the most healthy company and the financial system of country is not getting in a problem. Like LTV, why LTV? They have brought LTV regulation, and they have brought risk weight regulation. Everything regulator has brought, and on ALCO, that is the liquidity management, they are very stringent. They do not want to encourage what commercial paper. You see, ALCO, I told you, liquidity risk is the biggest risk. If you are having 30% of borrowing from commercial paper, as people were having in 2018, how much problem came? National Housing Bank and the Reserve Bank of India came with the various major TRTO and all that. They supported. Otherwise, if they would not have supported, many top companies have also failed. Having 30% commercial paper just for reducing your cost of fund is not good. But having 0% commercial paper is a prudent way of working. But that is also a lazy way of working. Because if you are even 5% commercial paper you are not having, you are happy that I am not having commercial paper. Or you require 1,000 crore liquidity for 3 months of loans. And you are giving 2,000 crore liquidity. You say, I am having huge liquidity. But that is not the way of managing organization. If you require for 3 to 4 months of disbursement, 1,000 crore rupees, why you keep 2,000 crore? You are losing money on that. ALCO means liquidity management means managing asset and liability in such a way that you maximize return and you should not have a deficit of liquidity at any point of time. So you learn management. You don't do, I am very safe, I want to keep. Like somebody says, I will only be in home, I will not go outside. Then you cannot grow. So friends, reasonable risk you have to take. You have to take the well-informed risk so that you should not falter. At the same time, you make money also because the reward risk, they go together. Now coming to people risk. This is the highest risk we are carrying. Today, employees are carrying unauthorized XP. Sales manager, they are working with you, they are taking sale leave from you, and they are giving file to DSA and taking additional commission. So friends, all these things are very difficult. High attrition. Most of you are tempted to see that all employees come from, suppose you have hired a regional manager, he will bring all branch manager, sales manager from his earlier organization. It's the biggest risk. If the regional manager leaves the company, all will go, and 6 months your business is stopped. So please avoid taking all employees from one company, or don't allow your regional manager or business set to bring all people from his earlier company. This is the biggest risk. In this segment, the talent is not there. You have to keep on training the people, that is investing huge money in training the frontline people. So top people, don't worry, their talent is available. That is more important. Another important problem comes when a credit head or the operational head or the sales head, they come from a prime company. Like they are coming with, they were doing 50 lakh rupees, 1 crore rupees loan. And when they come here, it is not a right fit. It is not a right fit entry. But why we bring them? Because sometime promoter or MD or CEO wants to grow the business and he finds that this person is great. But nothing wrong if I have a talent in leadership and I was doing 50 lakh rupees 1 crore loan. When I have come to a low-income affordable housing finance company, I should adopt that situation. So my submission to all credit heads who have come from a bigger company, you don't try to see risk in everything. See that last 10, 12 years pattern, and every company has been doing good, excepting in the beginning, some company have faltered. And if salesman head is coming from outside, if your model is to do loan of 10, 20, 25 lakh rupees, don't run for 50 lakh rupees loan. That is not in our DNA. Your team, ground level team, is not attuned to handle a bigger loan. You will fall into the problem. That is a tendency to grow the book. We all jump into the 50 lakh rupees, 1 crore rupees loan, 1 crore rupees loan, and then the organization becomes problem. My guidance to all people that when you take a decision today, particularly at a CEO level and a chief operating officer level, you take a decision, you think how this will behave after 3 years. Don't look today that I have to grow a book. X company is running 30% growth, I will do 35%. You can do, you have more people, more sourcing people, more location. You can grow business within our DNA. DNA should not be changed because that becomes disastrous for the company. This is what is the message I wanted to give to each one of you. Nothing wrong I have been in the bank doing 50 lakh crore rupees and 100 crore rupees loan. When I came in Aadhaar, I am doing 5 lakh, 10 lakh rupees loan. I must understand and relate what I am doing. And all talented people, you need adaptability. I will just tell you one situation. Lord Krishna story I am telling you. You all remember when Lord Krishna, when Kans invited them to Mathura for attending celebration, Lord Krishna along with Balram, he came to Mathura from Gokul. And when celebration was going on, the plan of Kans was there that he will kill Lord Krishna. But Lord Krishna, in the midst of the celebration, killed Kans. And Jarasandh, who was the father-in-law of Kans, his both daughters were married to Kans. Jarasandh got shattered because his both daughters got devastated because of the death of his son-in-law. He got wild to take the revenge from Lord Krishna. Initially, Lord Krishna tried to fight with him. But thereafter, he made the entire army and wanted to finish Mathura. Lord Krishna realized that if he is going to fight with Jarasandh, the entire Mathura will be with the bloodshed. Immediately he told Balram, let us leave the Mathura, go somewhere else. Balram resisted. Why we should leave? We will fight with the Jarasandh. But Lord Krishna insisted and he left. He left, and that's why he called Ranchor. He left the battleground and went away. After a certain number of years, when Mahabharata was going to happen, and Arjun, Kaurav and Pandava both were on the war. Arjuna was not in a position to fight. He wanted to give up fighting the war. Same Lord Krishna, for 18 days he gave guidance to Arjun why he should take forward the battle and kill the Kauravas. Now you see the two faces of Lord Krishna. One, Ranchor, other, he insisted battle to happen. So why? Because there both the armies were opposite to each other. In Mathura, Jarasandh was coming to kill all Mathuravasis. But there both the armies were there. Situation was different. So friend, always understand, irrespective of which company you have come, irrespective of what model you have done earlier, you should have adaptability. Time, space, situation, and circumstances should always be kept in mind. Whether do you loan to a bigger person, whether you do a loan to a small borrower, always understand one size fit for all is never applicable. That's why adaptability is the key which we all need to have in ourselves, and that only takes care of all the problems and the growth will come. Next slide. Friends, this is again liquidity part, which partly I have discussed because I thought regulation, though it is not concerned the junior and middle management people, but Reserve Bank of India has brought very difficult. They have said there has to be minimum 15% capital adequacy. There has to be liquidity coverage ratio. They have given glide paths. If you are a senior professional, by 2000, December 25, you need to have 100% liquidity coverage. That is, whatever outflow you have in 1 month, this should have the liquid security which you can liquidate in a day and you can pay off. Because short-term liquidity is always a problem. Long-term liquidity is never a problem. That is why liquidity coverage ratio, which is applicable to the bank from last 5-6 years, it remains applicable. Reserve Bank of India says that you should always see the mismatch. In asset liability, they have created from 1 day to 30 days to more buckets, 0 to 7, 7 to 14, and 14 to 30 days, because shorter end, always the problem happens. If today you need to, tomorrow you need to pay to your lender, how you will get money in 1 day? But 15 days you can manage. Therefore, RBI is very particular that short-term liquidity should always be kept. And what they have said, that you define your policy, how much percentage of short-term loans you will have for long-term loan, how much percentage of loan you will have for the assets, all those parameters there. RBI said, I am not concerned what you do. What you define the policy, you to adhere that. And funding consultation, if you are borrowing from one source maximum amount, you are putting yourself at risk. Like one bank is generous and they are giving you 1,000 crore out of your 2,000 crore rupees. Tomorrow that bank becomes angry with you, you are lost. So concentration risk should be avoided at every point, every situation. This should never be allowed to be happening in organization. Please understand. Next. Friends, this is the important thing which I am trying to tell you. Managing risk is very different from managing a strategy. By sitting in head office, you can make a strategy, how much we will grow, which segment we will do. But managing risk is different from that. Risk management focuses on the negative threats and failures. Whatever the threats are coming, whatever likely failure can come. You are not astrologer, but is a man of ordinary prudence. You think on that, what risk I am having, and that you need to manage, and that is called managing risk, rather than opportunities and success. I told opportunities in the beginning, these are humongous. I told the risk also, there has to be fine balance between two. But if you are risk averse, your organization will never grow. You will never be able to make money. You should always think like in circus, a boy who moves on the rope, he has to move on the rope, but he has to ensure he is not falling down. Similar way, you are like a circus player. Similarly, you have to manage the risk and you have to manage the business, and that's why the risk management department does his own work, board does his own work, the business does his own work, but everybody should understand. Business head does not mean that he will do anything. Credit head does not mean that he will not do anything. Everybody should understand his or her role, and the moment you are professionally capable and professionally knowledgeable, you are going to be managing these things. Success of an organization is about smart risk management, not about wild risk taking. That is what the growth is all about. I will end my presentation here with another story, and then I will invite the question. Again, the story of Lord Krishna I will tell you, and Lord Rama. All of you are leaders. All of you are leaders. How you have to lead the team. You know, the Lord Rama, when he went to fight with Ravana, he was having the monkeys and all those as an army. That army was maybe very strong, but they were not knowledgeable. So if your people in the field are not very capable, you have to lead from the front like Lord Rama. Lord Rama led that monkeys and all those from the front to ensure that they follow. So when in your organization, the frontline people are the new or management trainee are not very experienced, as a business head, as a credit head, you have to ensure that they are led from front. While Lord Krishna, when he was guiding to the Arjuna, he was having a very learned person. He acted like a coach. So if your team is capable, you have to work like a coach. If your team is not capable, you have to act like a front runner leader and go ahead and give them followers. So this is the two ways of leading your team. And once all my business head and all people, they understand how to lead the team, I think there will be no dearth in getting the success at every stage of life. There is no dearth of business in the country. Only risk management has to be done. And if you see, the failure of the finance companies is greatly reduced because the risk awareness everywhere comes. So now I will stop my presentation here. Kalyan, if anybody wants to ask any question, I am open to that, depending on the time which they want. I have no problem.
Thank you, sir. For just a minute, Balaji. Thanks a lot, sir, for a wonderful session. One of the ways I would like to suggest is that if it's possible, would you like to take a question directly? Some people can still write in the chat.
Download Virtuoskill mobile application from Play Store now. Enjoy listening to all the webinar and free segment in every module.
He wants to know how artificial intelligence is helpful in managing the risk.
Yeah.
Friend, I think today's environment, the artificial intelligence and algorithm and all those things are very important in managing the risk. I am telling you, all the data cut and all the things you cannot do on your own. Though in low-income affordable housing, all these things, tools are not used. But what happens, I'm telling you, by sitting in your office, you take the data from the bureau and you take the data from different organizations, because in this case, alternate source of data is more important. And by using the artificial intelligence, you can find out which segment, which customer, how it is going to behave and all those things. So artificial intelligence is going to be a very important tool going forward. Many companies have always been using, but in our segment, this is also getting gradually encouraged. Like if you have to open a branch somewhere, by using the various tools available, you can find out whether that area is worth opening a branch at. So whether it is analytics or using artificial intelligence plays a very important role in doing the analytics. And once you know the analytics, I think delinquency will be taken care of. That's more because you can know the customer behavior by having some sort of data, and you can find out whether this customer is going to behave properly or not. So I am for you. I am absolutely supporting your view that artificial intelligence, as gradually we move, it is going to be the order of the day.
Home loans risk on the NRI segment.
I tell you, Chiranjeevi, NRI segment, the risk only happens if he is in a country where we are not. There are certain countries which are in negative list in the many housing finance company. If the NRI is in a proper country and getting his income, there is no problem in giving the loan to him. But in case of NRI, to take a local person as a co-borrower, his father, mother, or something like that, you see, the risk of cash flow. If he loses the job, their money will not come. But at the end of the day, our property is there. We are not here to sell the property. We are here to get the cash flow. So if he is not working in a negative country, probably there is no risk. We have been doing large cases of NRI and there is no problem. But take care properly that one local person, his father, mother, should always be a co-borrower. So don't bother. These are the good customers. They are good customers by and large.
But there's an interesting question from here from Srijan sir, saying that I would love to hear him on technology adoption. Would you like to take it, sir?
Yeah, I will definitely take it up. Friends, is there any choice for anybody in the country, in any organization to work without technology? Please always understand, I use the word, this is a highly operationally focused business. Most of the companies have the OPEX of 2.5 to 5% of the AUM. And all top companies, they have the OPEX to AUM hardly about 0.6, 0.5%. So if tomorrow in competitive environment, you have to reduce the interest rate, the only way that you have to reduce the OPEX. So there are two things. One, you need to be completely digitalized on the process front. Logically, the digitalization first should take on the customer front. But in our segment, most of us have already digitalized ourselves at every stage of the process so that the cost of doing business has been reduced. Second thing, with regard to the customer front, I think many companies, though barring few, you have a customer app, you have a sales mobility, you have technical mobility, all those things you are having where the big files are not required to come. Your sales manager can directly send it. So if the moment customer facing you bring at least 40-50% customer of our segment, they have a smartphone. If they don't have, their children are having a smartphone. So the moment we are able to educate our customer to send EMI through the payment gateways or through the NASH collection, that is cycle date, and he can see the customer app for everything. I think you will provide the best customer satisfaction. At the same time, you will be able to see that processing cost happen. So digitalization and analytics are going to be the future. That's why gradually adoption of data science is going to be key. One of my friend asked about artificial intelligence. You can find out which customer is now shopping here and there and vulnerable for the BT. All those things you can get it. About 10 years back, you were not getting all those things. It's simply you take the script from the bureau, and once you analyze everything, you will be able to know how many customers are vulnerable to go, how many customers are going to become NPA, how many customers are paying another company, not paying to you. So all those things will be able to be known with the massive use of technology. Without that, not possible. But do digitalize the front also, back services we all have done.
Saying that can we afford to do deviation on technical side and how much on the affordable side? I think this is very gray area to to respond.
I'm going to tell Kalyan, it's a very sensitive question you have asked, but I will definitely reply you. These are my all family members here, same community. Please understand, all the loans which you are doing, most of the estates, they have up to 100 square meter or 150 or 200 square meter. They have waived the condition of the building plan approval, but the condition is that the building plan which will be prepared by the architect should be as per the building plan laws. So approval part is waived, but I tell you, if you are in Mumbai, Delhi, Chennai, all big cities you are there, you have no choice. You have to go as per the approval only. But if you are doing the loan at the outskirts of city or in the small towns, though every state says that Gram Panchayat approval is also required, but 90% states have not put in the proper process. So most of the houses are constructed either side of the road, and they prepare the plan and they construct the houses. I think neither you have heard, not I have heard that there is any demolition activity taking place because the government is not able to set right. They have given authority to the Gram Panchayat Adhikari, and he gives any approval. One approval you have taken, you are not on the wrong side. Only in case of the cities and urban municipal limit, please try to avoid that because some demolition has taken place, and the demolition has taken place only in those cases where the developer has constructed the property or sold the property on the institutional land or land reserved for anything. So this needs to be properly seen by the head technical or regional technical manager. Don't leave this thing to the branch technical manager, so that if any project comes to you, I think tell your regional technical manager to verify it that it is not on the wrong land. Now going outside of city, informal builders, they have the plot and they construct. That keeps on going on. RBI guidelines very clearly say this should done, this proper approval is to be there. But I think they also know, government also knows. Couple of forum I raised this issue. Why can't you make a policy for the Gram Panchayat property or outskirts property? But government wants that people should get a house, and they are keeping an eye closed. I tell you, you see that across the country, from whichever location you have come, demolition has taken place only in the cities, not in the outskirts or the other locations.
Saying that what should be the limit of foreign LTV? I think I would answer this question saying that I think that's purely dependent on the income levels and your risk appetite of your institution and experience, right?
I tell you, Kalyan,
yeah.
If a person has got 3 or 4 lakh rupees annual income, if you are giving the FOIR of 60%, you are not leaving money for his family expenses. So it goes. If a person has 10 lakh rupees annual income, you can go up to 60-65% FOIR. But if a person has got 3 lakh rupees income, if you are going beyond 40%, what he will eat? So that is a very simple thing. If you are not leaving something for his to manage his family, then it's not going to get defaulted. So I think most of the companies, they have made the policy. Coming to LTV, the regulator has allowed LTV up to 90%. Earlier, regulator was permitting the LTV on 2 parameters. The loan amount, like if If a loan was 30 lakh rupees, 90%, 30 to 75 rupees, lakhs 80%, and beyond 75%. So now regulator has aligned this also. Risk weight and LTV are there aligned. Two criteria is there. This is allowed up to March 23 for giving fillip to housing loan. For any amount of loan, maximum LTV is allowed 90%. Like if any big company wants to give 2 crore rupees loan, they can give 90%. That is regulatory permissible up to March 23. But none of us are doing. We are normally what we are doing. In case of Gram Panchayat property or in case of informal segment, we are trying to keep LTV of 80% or below. And in case of the property made by the good developer and all that, we go up to 90%, 30 lakh rupees loan. We have not followed the regulatory permission of even 40 lakh rupees loan, you can go 90%. Most of the companies, they have missed that guidelines. Those guidelines are there. Even if 1 crore rupees loan you give, you can go up to 90%, but those guidelines we have missed out. It was not noticed by many companies. We are giving up to 30 lakh rupees 90%, 30 to 75, 80%. But if you are keeping LTV below 80%, your risk weight is only 35%. Always remember.
Sir, Panivel, how are you, sir?
Yeah, I'm fine, Palni.
Sir, this announcement, when it was come, sir, that you told it's 1 crore loan amount also 90% fire will go.
No.
Sorry, LTV will go.
No.
Palni, well, if you see the Reserve Bank of India guidelines, they have allowed, they brought these guidelines during time of pandemic to give fillip to housing loan. They said the criteria for risk weight and LTV, which was having two parts of the LTV and the risk weight, they are dispensed with that. They said up to March 23, the lender can decide LTV, but not beyond 90%. But this was not followed. I think many lenders are still following the old guidelines. Up to 90%, below up to 30 lakh rupees loan. Above 30 lakh rupees loan, the old criteria of 80% they are following. So if you go to the, I do not have circular ready, otherwise I have told to you, they very clearly available up to March 23 you can do, which is very near. Unless the Reserve Bank extend it further, this will not be applicable thereafter.
Okay. Yeah. Thank you, sir. Sir,
But then, but being safe, having a safe on the LTV, safe is very important, right, sir? And following the old pattern is always good. Nothing wrong in that part of it.
But below 80% is always good because you have 35% risk weight. You save capital.
Yeah. So there are a few questions coming up on multiple funding and funding to legal professionals still considered risky. I think, would you like to bundle them together? And this is the last question.
I will bundle. Multiple funding because intelligently making a Xerox copy of sale deed or registering same property 3-4 times. This is a typical problem which all of us are confronting. Multiple funding is a gray area. I do not know till distillation completely takes place, this will go on. But again, I mentioned in the beginning, the proper due diligence, if your technical manager inquires from the neighbor, he will know whether this property is sold. People know, but normally we are only going on the papers we don't see. And that's why the multiple funding is going on. This menace has been getting gradually reduced. It is not that much is there now. This menace is getting reduced. If you go in 2002, 2003, I think 1,000 crore rupee fraud took place in the housing finance. But now, if you see, this has been reduced. Where the builders are gullible and they are selling same property, so it is very difficult to control that. But Sarsai and all those things, tools are available. Only the like Maharashtra and Gujarat are some states where the memorandum of deposit of title deed is registered. There you can save yourself. The states where it is not registered, you have wait for a year or two to see their distillation. Where distillation takes place, it will not happen. And I'm sure in next 4-5 years, like Demat account, the property registration will happen. You will have a very easy life going on. Coming to legal professionals, they create problem. That's why legal professionals always there is a gray area. But it is not that all legal professionals they create problem. You have to find out what type of person. If a person is litigant, it is better to avoid. That is a risk you carry. Whether you do or not, that is a risk you carry. There is no ready-made formula for it. But if the property is good, sooner or later you will recover the money. Nobody can stop.
Okay. Thank you, sir, for the wonderful session. I must tell you that, since it was 14, 15, since I've been interacting with you, I was looking for the stories, and the 2 stories made a big difference to me. But you actually today covered on ESG, on green building, concentration risk, on operational risk. And I love this 3 A's of, awareness, action, awakening and action, and monitoring. This is something which I picked up very well, sir. I think this is the basics. I loved it. I'll also look at valuation of property. You look at, LTV, profile-wise, product-wise, slice and dice it and see for yourself how the portfolio is performing. I think these are some of very basic which could be done at a branch level also, at a regional level also. And then at the corporate level, obviously it's being done. I think a lot of learnings can come for these professionals. I love this one statement that you said that, assessment-based income is better than formal segment. I think it's very true. People normally have a feeling that salaried customers are better than the informal segment, but actually the other way is right. And I think you brought out that part of it. And I think this should be a lot of jingles to a lot of people the year saying that assessment-based portfolio performs very well. One word you picked up is being distribution agnostic as far as sourcing is concerned. I think that's the key, I feel, as far as the operation is concerned. Point, if we can nip in the bud, I think we can make a big difference in terms of being distribution agnostic as far as risk assessment is concerned. Sourcing, then the sourcing is a big challenge will not be there, and sourcing can become very easy. I also love the key man concept, saying in the informal segment, you need to ensure this, guys, because the key man is out, the family is out. I think is very important. I always say that today people should learn to not only sell loan, but along with the loan, with the investments, insurance, all these things, learning has to come to us so that we do a package rather than selling only a home loan, and not sell insurance for the sake of policy, but selling insurance for the sake of the customer's interest and the interest of the company. So, and the bucket funding, something we spoke about it, something which is a new trend that has come up. I think we need to look at it. And I love the high attrition questions that you picked up, saying that people moving along with the team, something this needs to be stopped and it doesn't work. And so many learnings were happening, sir. And I tried to pick a few things over here, which I put it on my piece of paper while you were talking. Probably this was a master class. And mind you, Tripathi sir is one gentleman. I can vouch for it for the last 12 years that every time you go, you go and learn something from him and come out. And I always told this, sir, that it is fun to talk to you because every time I meet you, I learn a lot. And we also like to thank each one of you to be present here on a second Saturday on a holiday. That indicates your ability to learn, and we really appreciate each one of you. If anybody wants to share something, you can put it on the chat and tell us how you found the program. You can say whether it was good, very good, or excellent. Whatever you want to share, you can put it on the chat. And I formally would like to bring the webinar session to close. And I would like to thank Tripathi sir for being here today and sparing his valuable time with us for almost 2 hours, 2.5 hours. Thank you, sir, once again. And I'll keep, dipping into your knowledge as we go ahead.
Thank you, Kalyan. I will tell my all participant friends, we all listen to the VUCA world. We are living in the volatility, uncertainty, complexity, ambiguity. We don't have a choice to get away from the VUCA world. As the world is getting more connected, technology is becoming more pervasive, all the problems are bound to come and we have to manage our life being with those things. So I use this VUCA in a different form. You should have a vision, you should have an understanding, you should have a courage, and you should have adaptability. So instead of going the negative version of VUCA, always start thinking from the positive way that V for vision, U for understanding, C for courage, and A for adaptability.
That was wonderful. I think this is a new definition of VUCA, which I loved it because people from VUCA has moved to bunny world, and they are talking bunny is much more difficult because of the situation that we are going through. I think we are going to pick it up, that statement also. Thank you, sir, once again. I request all the participants, if at all you feel like, you can download our app, our Android-based mobile app from the Google Play Store. It's Virtuoskill. You can go and see there. Download that. You can listen to all the webinars that we are conducting over here, which is completely free. A few courses also, 20% of the courses also free over there. You can go download and watch those things. And please keep coming back to the webinar sessions. Initially, the webinar sessions were only for our learners on our platform, but we have now opened it up for the entire BFSI sector. So we would like to have more number of people coming for the sessions coming up every month. Thank you. Thank you from Virtuoskill, from all of us from here. Bye-bye.
Thank you so much. Thank you. Thank you. Thank you.